Hello, everyone. In this video, we're going to jump right back into the reserves. We just left off our reserves for bad debt. We're going to start with reserves for undelivered goods and services, and then we'll move into reserves for unpaid amounts. So, reserves for goods and services is somewhat the opposite of reserves for bad debt. Bad debt is we've provided a service, but we have not yet received the money. Undelivered goods and services is we've received the money, but we've not yet earned it. We've not yet provided our obligation. So the example is during the tax year of December 31st, 2025, Donna's Auto Parts received $275,000. Of this amount, $25,000 is a prepayment for goods to be delivered in 2026. So our general rules say we received cash, it should be included in income. But the reserve says $25,000 is a prepayment that we haven't earned yet. So we should have a reserve for the difference. Income Tax Act 9 would include $250,000 in business income. If this company's on the accrual basis, their income statement will be showing $250,000. The Tax Act Section 12 will include $25,000 in business income for those additional funds received. And then Section 20 has us deduct the reserve for $25,000. That gets us back to our $250,000. So we started at $250, added 25, and then subtracted a reserve of 25. Section 12 will add the reserve from 2025 next year in 2026. Once it's earned in 2026, because it's delivered that year, there's no new reserve. So the exercise for this question is going to include both doubtful accounts and undelivered services. Zimmel carries on the business of Zimmel's graphic design as a sole proprietor. The books and records are maintained on a cash basis. In 2025, the first year of operations, the business has cash sales of $47,800. In addition, Zimmel received advances of $5,600 for services that she will only provide after the end of the year. And at the end of the year, there are uncollected credit sales of $26,300. Zimmel estimates that $425 of the year-end receivables are doubtful of collection. Determine the business income for Zimmel's graphic design based on the information provided. I will add the appropriate Tax Act references. So because Zimmel tracks the sales on a cash basis, $47,800 is what's appearing on the financial statement. The receivable amount of $26,300 has not yet been added to income, but the cash advances received of $5,600 likely should be included in income because that cash has been included. So what do we do here? The cash sales, assuming that Zimmel only recorded the sales earned on a cash basis, would be $47,800. That's the accounting income on the cash basis. But we need to add the advances that were received, $5,600, and the accounts receivable that Zimmel didn't record. This is both based on Section 12. This cash was received. This cash is owed. So that's our total income, but from it, we can take reserves. We can take a reserve for undelivered services. This cash advance we haven't earned yet, so we can reserve it back out. And of the accounts receivable, $425 is not expected to be collected. So this nets to a total income of $73,675. That's the taxable income that Zimmel will report on their tax return. So that gets us to inventory reserve for unpaid amounts. A business sells inventory, excluding real property, with part or all of the sale price not due until at least 2 years from the sale date, i.e., these are installment dates. A reasonable reserve is allowed. Calculate the gross profit divided by gross selling price, apply percentage to unpaid amount at year end. The reserve limitation limits the reserve to 3 years, sale year and the following 2 year. Now that we're through the slide, I'll explain. There's a lot of businesses. You see this a lot with businesses that sell furniture, where you might get a living room set for $4,000, but you don't pay for that set up front. You pay, say, 20% down, and then you make payments in the next give couple of years. So what this says, the sale of the furniture is recognized entirely in the year, but you can take a reserve for the portion of the sale, portion of the profits specifically, that have not yet been collected. By limiting the reserve to 3 years, it makes sure that the entire amount will be recognized within 4 years, specifically within three, but it's all going to be dealt with within 4 years. So example one, an automobile dealership sold a new auto for $42,000. The cost of the automobile was $31,000. The terms call for annual payment of $14,000 over 3 years. There's no interest. And the buyer owes $28,000 at the end of 2025. So the automobile cost $31,000. They sold it for $42,000. So their profit margin, 42 divide, or I guess 42 minus 31, their profit was $11,000. So 11 of the full sales prices, that profit margin was 26.19% of the total sales price. So why am I doing the percentage? Because when we apply the percentage to the amount not yet collected, that determines how much our reserve gets to be. So the dealership includes a sales price of $42,000 less inventory cost of $31,000. There's our gross profit of $11,000. So we take that profit portion, 11,000, divided by our sales price, 42,000, and that tells us how much of that sale was profit, what percentage. So if we still need to collect $28,000, that means we haven't collected 7,333 of profit. Do you understand what that means? It gives us a profit portion or a profit rate. I guess said another way. Sorry, my alarm went off. Said another way, our net income for taxes is our profit. It's our gross income minus our cost. So we're only taxed on the profit portion. So when we're protecting ourselves from taxes, we can only protect the profit portion. So we figure out how much of the sale was profit, and then we apply that portion to how much have we not yet collected. I haven't collected $28,000, which means I have not yet collected 7,333 of profit. The net increase in business income will be 3,667, which is our total gross profit minus the reserve. The add back of the reserve of 7,333 will be added to 2026, but we get a new reserve because they're only paying $14,000 next year. So we'll have a new percentage to apply. In 2024, a real estate developer sold a parcel of land for $200,000. The land inventory cost $90,000, so they made $110,000. That's their profit. $40,000 paid immediately, with the remaining amounts payable in eight equal installments of $20,000, each beginning August 1st, 2025. The taxation year end is October 31st. So in July of 2024, they paid $40,000. Next year, they'll pay another 20. So the profit portion, 110,000 divided by 200,000 is 55%. We've only collected $40,000, which means there's 160 still to be collected. So that means of our profit, 88,000 is still outstanding. So the reserve can be claimed for 2024, 25, and 26. We have our initial reserve being that $88,000. That's the profit portion of the uncollected amount. The next year, when we get our next payment of $20,000, now our collected amount is we've received another 20,000, so now it's 140,000 still to be collected. applying our profit portion, our profit rate, that means our new reserve is $77,000. So in 2025, when we add back the old reserve and recognize the new reserve, that difference is $11,000. So we will have net income of $11,000 that we will pay taxes on in 2025. 2026 adds the old reserve. We subtract our new reserve because we collected another 20,000. But our reserve is limited to just 3 years. We only get that reserve 3 times, and then we're forced to recognize the rest of the income. So no reserve can be claimed for 27. It's beyond the time limit, 36 months. So the net increase in business for each year, 110,000 gross profit minus our reserve, we recognize $22,000 of income in 24. We recognized another 11 in 25. We recognized 11 in 26. And 2027 recognizes the remaining amount. It added last year's reserve. We can take no new reserve, so we recognize the additional amount. These four numbers will add back to our original gross profit, the original amount we pay taxes on. So the exercise for that, how this book handles pages is sometimes frustrating. So let's see if I can get back to page 347. Okay, exercise 6-7. Inventory reserve for unpaid amounts. In November of 2025, Likes Jewels sells a diamond necklace for $120,000. The cost of the necklace was $66,000, resulting in a gross profit of $54,000. The $120,000 sales price is to be paid in 4 equal annual installments of $30,000 in each of the years 2026, 27, 28, and 29. So we sell it in 2025, but we're not getting our first payment until next year. It has a December 31st year end. Indicate the maximum amount of the reserve to be claimed and the net increase in business income for each of the years from 2025 to 29. So to try and help keep this flowing properly, I've set it up in sort of this table system. Our sales price was 120, the cost was 66. That creates our gross profit. So our gross profit is the basis for our reserve. Our reserve will be the gross profit times the remaining portion of the funds, still to be received. We sold the necklace in 2025, and our first payment doesn't occur until 2026. So our first reserve is going to be 100%, the 54,000. We had profit of 54,000, but we're still waiting to get all of it. In the next year, we will have received $30,000. So proceeds received is $30,000. That leaves 75% of the sale amount still to be collected. We sold it for 120. We're still waiting on 90. So 75% still to be collected. So the reserve can only be 75% of the overall profit. So last year's reserve of 54,000 gets added to income. 2026 reserve is 40,500, means we will recognize income of 13,500. That is about 25% of the overall profit. Next year, 40,500 gets added to income, and our new reserve will now be half of the profit, 27,000. That's because we've collected 60,000, still 60,000 to go. Our unpaid amount is 50%. So we recognize another 13,500, the difference between our add back and our new reserve. In 2028, we receive our third payment, but we've already taken 3 years of reserves. That's what we're limited to. We can take their initial sale and the next 2 years. So there's no more reserves that are allowed to be taken. So we will add the income, our last year's reserve of 27,000. No reserve can be taken, so that full amount gets recognized in income. By 2028, we've already included all of the $54,000 of profit. So even though our final payment doesn't get received until 2029, it doesn't matter. That income's already been recognized, so there's nothing left to recognize in 2029. So that is our those are our examples and exercises related to the various reserves we can take: bad debt, undelivered services and products, and unpaid amounts on inventory. When we come back, we will get into limitations on deduction. So we'll start talking more about what expenses can and cannot be deducted from a business standpoint. Thank you for your time. See you in the next video.